Welcome back to the Unraveled Podcast. My name is Nina.
And my name is Elena. Today I wanted to talk about like escrow, mortgage payments, and stuff like that.
Okay.
My mortgage payment actually went up recently about by $150 because of the taxes and insurance.
Mm-hmm.
One thing I didn't know, so I've obviously been in real estate for 8 years now, and one thing I didn't know that when you purchase a house is your mortgage payment has the possibility to change.
Mm-hmm.
And it's interesting, even though, as a real estate agent, it's a completely different side of things than being a homeowner. So I've had to learn a lot of things being a homeowner by myself that I've had to navigate and understand and kind of learn on my own. I don't think it's talked about enough that how you may purchase a house and your mortgage payment may be $2,500, but then, 2 years from now, it could be up to $3,000 because of your escrow and your taxes and insurance. And I think people don't realize what escrow is either.
Mm-hmm.
It's basically, I think it gets held at the attorney's office that you close with, right?
Mm-hmm.
And it holds enough funds in there for your taxes and insurance every year, which are kind of paid throughout the year in your mortgage. Am I explaining that right?
Well, so technically, once you close, the escrow account is a part of whoever has your mortgage.
Okay, so the attorney's office is not holding it.
No. Well, so there's two different things.
Oh, okay. I'm combining them in my head. Okay.
Yeah.
Disregard what I said about the attorney's office.
Well, no. So that is an escrow account when you're purchasing the house, but basically there is a little reserve pot that they keep in case you have a late payment or if taxes go up or so on and so forth. And it's usually a percentage. And so sometimes you'll get a notice that says, hey, we have too much in the escrow account. You can get a check back.
Oh, I didn't even know about that.
So for my mortgage last year, we got a check back for $300 because they had too much in the account.
Interesting.
But so I don't know exactly. We'd have to ask a lender how they actually will determine the amount that's needed, but I'm assuming it's going to be based on a percentage.
But I think it's not talked about enough in general between real estate agents. Well, actually, real estate agents, we don't even know enough about it because we're not the lender. But even with financing and lenders, I've never heard a lender have a discussion with a buyer about, I mean, I've heard them have discussions with the buyer about the escrow, but not about the possibility of your mortgage payments going up down the road because the taxes and your insurance is going to change.
Yes. And I wish people would talk about this. And that's where it's so important to have a good lender who actually has a relationship with the realtor and has your best interest at heart, because there's going to be a lender that will say, hey, you qualify for this maximum amount. And they will not tell you that, hey, if this is your max right now, what happens if it goes up? So it may not be in a buyer's best interest to spend $500,000 if that's what they qualify for. Maybe it's better for them to buy a house at $400,000 or $350,000, because then if your mortgage payment goes up because taxes and insurance are going up every year, that you're still okay.
Right.
I'm seeing it across the board where people are actually going into foreclosure because they're house poor. They went for that max qualification, but I tell people, look at your monthly payment.
Agreed.
Do not
As
look
a
at your
buyer,
max
that is all
amount.
that matters.
Absolutely. So if your first decide what you're comfortable with, and then go by your monthly payment and what that equals in your purchase price. Because, I mean, if you're maxed out and then your mortgage goes up a couple $100 a year,
you won't be able to afford it.
So then what?
Agreed. Totally agree.
I can't. People need to talk about it more.
I agree. And then also, you have to consider the other factors in mind as well, like your utilities, your HOA fees, and all of those things. And I think people completely forget about that because you may be downsizing from a $1,600 a month apartment to a 2,000 square foot home where the mortgage is $2,500 and the square footage is almost 1,000 more than the apartment. And you've got to realize that your utilities aren't going to be the same cost anymore that they were for a 900 square foot apartment that they're going to be for a 2,000 square foot home.
Yeah. And I mean, that's a conversation that we as realtors can have with clients.
Absolutely.
And I have this all the time because a lot of times people will want a big house. And I say, that's fine. But did you know your utilities are probably going to be this much more? And they don't even think about things like that. Your monthly payment's going to be this much plus utilities. Are you going to be okay? I personally, back in the day, houses were only built so big. And then now it's just bigger. Everything's just huge.
Right.
And sometimes, for a big house, your utilities can be thousands a month. Thousands.
That's true. That is very true.
So it might be glamorous, but just as long as you know all the different things that come out. And this is assuming there's nothing that needs to be repaired in the house, nothing that breaks down. Because,
so true. So true.
The law of averages is when you get into a property, something's going to need to be repaired.
This is
and
true.
If you're just barely making the mortgage payment,
then you don't have funds for the other stuff.
No.
Yeah. No, I totally agree.
So,
and also I think it's not talked about enough, the different kind of financings that are available as well.
Absolutely.
I know when I first started in real estate, I think that was maybe 2016, for myself and the clientele that I was working with, USDA loans were so popular. That's like all I felt like I did for my first 3 years in real estate. And now I don't ever hear USDA ever. I know USDA is only approved for rural areas like Franklin County, Barrow County, and those are just me listing some of the counties that are surrounded by Athens. But Athens does not qualify for USDA because it's not considered a rural area. Yeah. But there's also a website you can go on to search the house that you want to look at and see if it qualifies in that if it's in that USDA area. And basically what USDA is, and this is for anyone who doesn't know, it allows you to purchase a home without a down payment because you're in a rural market. They basically give you the funds to purchase a home. So it's 100% financing. And the interest rate is typically a little higher on it, but at least you get in home without having to do a down payment. And here's another thing that lenders did not, back then I used to have issues with lenders not explaining to the buyers that yes, it's 100% loan. You don't have to have a down payment, but there are still closing costs. Oh, yeah. There are still prepaids. So you may not have to bring an extra $10,000 of closing for your down payment, but there's still funds that need to be paid to get to the closing table, like the attorney's fees, your escrow account, like all of that other stuff. I can't think of everything and that lump sum of closing costs. But the USDA is a phenomenal program for first-time home buyers. When I first started, I had a lot of people that wanted to live in Athens, but they couldn't afford to live in Athens because you had to have at least 3.5% down with the FHA loan. But USDA works really good in Oglethorpe and Madison and Winder and literally everywhere surrounding Athens. So let's go find something that will still put you within 15 minutes of Athens, just outside of it within your budget.
Yeah. And, there's so many loan programs that I see people don't understand that it's actually an excellent program. So as an example, I will oftentimes see listing agents that will not even hardly consider an offer that maybe has a VA loan or an FHA loan. And are there some hurdles to walk through with that type of
Absolutely.
Absolutely. But if you have a great agent who understands what's needed and they put an offer in on a property and there's not a lot of concerns, it could be the smoothest transaction ever. And we shouldn't discount the VA, USDA, and FHA loans because I have closed so many of them and they have been seamless and smooth.
Agreed. And over time as well, those requirements change from the lender. And I know back then when I first started, I did a lot of VA loans. I still do a couple. I haven't done a lot of VA loans as much lately, but back then I did a lot of VA loans and the VA used to be so picky on everything. Like they would nitpick a chipped paint on a window. I'm like, what? So then I feel like more people were cautious back then about doing a VA loan, but VA, I feel like VA loans aren't, because obviously you have to be a veteran to have a VA loan. So it's not like they're going to be, it's almost like maybe 1 out of every 10 or 5 clients is going to have a VA loan. So I think people don't realize that the loan industry is ever so changing, that the same requirements they may have had 5 years ago for a VA loan aren't as strict now. So I've done in the last couple of years, the VA loans that I've done have not been strict at all. I have not, probably the last like 5 or 6 VA loans I've done, I have not had them come back with a single item for repair. Versus, 6 years ago, they were coming back for chipped paint on a window.
And also, you probably didn't even realize it because you're just that good, but you're probably putting offers on these properties that are already most likely going to pass anyway.
Exactly. That's so true, because I don't want to set my client up for failure either, thinking they're going to get this home when the possibility of the VA coming back and saying, hey, there's these things, and the seller is obviously not going to fix those kind of things. So yeah, no, I totally agree.
And on the listing side too, if we know that the property checks out and we get a VA loan, great. Because I mean, there's no concern there too. If it's a property that needs tons of renovation, then it probably will not be good. I got an offer on
or even for a USDA.
Yeah. I got an offer on a fixer-upper house that I had listed a little while back. FHA. I just knew.
Yeah.
I just knew. And,
And I don't think not all agents understand that, but I think it's so helpful when at least one agent on one side of it understands and the possibility of this not going through. It saves everyone the time and the headache. There have been transactions before that I've had to deal with in my career that I was like, oh wow, shit, I didn't know that, and we didn't find out until later on.
Yeah.
Like I was selling a house in Atlanta one time, and the HOA only apparently this is like when I tell you the Atlanta market is so freaking different, I've learned so much in my time selling houses there, that there's some communities that people do not pay their HOAs. Do not pay their HOAs. And if there's a community that does not, I think if it's more than 50% don't pay their HOAs, then some lenders will not loan on those communities, or they'll make you put more of a down payment up.
Yeah, they're not warrantable.
Yeah. So I had a client, we made an offer on a property. We didn't find out until halfway to the closing point that the community the lender wouldn't loan on it because nobody was paying their HOA dues. And it's the most craziest thing. There's not a community in Athens that I even know is like that. So, but different market.
In Athens, some communities are not warrantable if there's not enough owner occupants.
Correct.
And I'm sure there's people everywhere that are not paying their HOAs.
Yeah.
But I've not heard that was the reason per se.
Right. In Athens at least, but it's very common in Atlanta. But in Athens, I know about the condo warrantable thing. And that's always helpful to know as well before when you're making a client. Because the thing in Athens is there's so many apartment style homes. There's the condos, and there's some condos that look like townhomes. And there's some townhomes that are really condos.
Yeah.
And that's a whole nother thing, because if you don't know all of this stuff before, you could be wasting time for your client making an offer on something that they really probably can't qualify for. And I think in our market too, because there's so many like condo apartment style homes that look phenomenal for first time home buyers, because there's so many investors in those communities. Like you said, some of the lenders require at least 50% of it be owner occupied. Most of them in Athens are not going to be like that the lender's immediately going to consider an investment loan.
Yeah.
Which means you're going to have to put 20% down. And a first time home buyer does not 20% down to buy for a new home.
And it matters. This goes back to who you use as your lender. This is why it's important, because...
But also your realtor.
Well, yes, because the realtor will often give you some suggestions, recommendations for the lender. I have a deal going on off market where I know for a fact this community is warrantable, because I've had clients purchase in here many, many times.
What community is it?
It's Jamestown.
I don't know where that is. I was just curious because there's not a lot of warrantable.
It's in 5 Points.
Okay.
Or anyway.
That makes sense then.
But I checked with a couple different lenders. They said, yeah, all good. The lender that my client is choosing to use swears up and down it's not warrantable. So we're probably going to have to get a new lender.
And some lenders can do it and some lenders can't, but then that's where you have to know who can do it and who can't do it, and even go back. I've even gone back and to look at sold records in the community and call the other agents that have sold and say, hey, how has this transaction been? Has the lenders been able to loan on it? Who did you use?
Yep. And some lenders will have a great strong condo department that they're used to closing, and they know how the system works. They know how to ask for the information from the HOA. They know how to deal with all of that.
Exactly.
Versus some lenders, they do just once in a while and they're not as strong. So leaning towards a lender that is very familiar with that process makes a big difference.
Totally agree.
We're going to have to go with another lender anyway. I didn't want to say I told you so, but But
at least it's a learning experience for that realtor. Was she from Athens? Was she like an Athens agent? Yeah. Well, it's a good learning experience for her, because I'm sure she'll have to deal with it again in the future.
Yeah. And there's a lot of great lenders that can help, so there's options out there, which is great, but it's definitely interesting. There's people that will get into real estate and not realize the difference between single family, townhome, multifamily, condos, and how that all relates to getting a loan, investment loan versus occupied property, all that kind of stuff.
Correct. And as we're like really talking this through, and then people are like, oh, I don't need a realtor. And I'm like, you're hiring us because of our knowledge and because of our ability to kind of connect you with the right property that fits what your budget is, what kind of financing you're able to do. Like it's valuable insight.
I want to say something like, if you're going to choose a realtor that sells one property a year, honestly, you would be just as well off doing it yourself.
Okay, that's fair.
You know,
it also isn't going to give you an advice because they don't know anything.
So, across the board, just using a realtor won't necessarily make your life better if you pick the wrong one. But if you pick one that is in the market actively, then it's a game changer for you.
Totally agree.
But like picking a relative to support them and they've only ever sold one house or 5 years ago, you might as well save your time and money.
I totally agree.
But people don't want to hear that.
Never.
But it's the truth. We tell the truth here.
I agree. And I'm like, if you're going to hire someone and have to pay them, pay the right person. Hire the right person. You're already going to have to do it. Like, do it the right way.
Yeah, why not get your money's worth?
Agreed.
That's what I think. So not everyone's created equally.
This is true.
The experience and the connections matter.
I totally agree. Well, anyways, I think that wraps up today's episode. You can find us anywhere you watch podcasts. We're on YouTube, Apple Podcast, Google Podcast, everywhere. And we look forward to having you join us in our next episode.